The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We start out the day like we usually do, looking at our FTSE and our DAX. As you can see, both of those are in negative situations. We have a 78% retracement, three drive to a top pattern in the DAX on a 15-minute chart. And then on the FTSE, you can see we have a Gartley at the 50% and 61% retracement on the FTSE. And as you know, the Brexit thing was, believe it or not, folks, this is hard to believe, but it's drawn out a little bit longer. This all started on June the 27th of 2016, and it's still going on. I don't know how long it'll be, but it looks like it's going to be a long time. I'm going to get into trouble here right now for just a second, so bear with me. I'd like everybody to take a pencil and paper. And on the top of the page, I'd like you to write 1.8 million, and then you draw a line under it, dividing line, 7.1 billion. There's 7.1 billion people on the planet, folks. There's been 1.8 million people have died of the coronavirus. It's been almost exactly a year now since December when we got the gift from Wuhan. And I think when you look at that figure, it comes out to 0.02%, not even 1% of the population of the world has died. And yet we have shut down the world here in the United States, and I don't think it's fair. Remember, please believe me, folks, this has nothing to do with TFNN. You're listening to a cynical old man that's been around a long time and doesn't believe very much, because I know they lie to us all the time. They cheat us all the time. They give us misinformation all the time. And sure enough, I've become a little cynical. But I look at that number and I say, come on now, guys. There's something not right here. Now, I will say this. Finally, guess what? We have a new virus come out by Pfizer and Company. Remember, if you're going to take a vaccine, take the one from the people that was able to give a drug that was able to raise the dead, Viagra. So this should probably be the one. Now, you know what my degree is. I've been in this business. I worked for Eli Lilly for 11 years. I was the inside of that for 3 of those 11 years. And, I'm just saying that there's something not right with that many people not dying. And I better stop. I really should. I get enough trouble. So I'm just going to stop. Hey, boys and girls, we got something really big happening here. Let's just take a quick look at one of the markets that I think will be really interesting coming up. Okay. What we're going to do now here is we're going to take a look at the copper market. Here's the copper market, folks. And boy, if we've ever heard the sound of one hand clapping, it's got to be for our good friend, Mr. Z, who called this puppy all the way up from March. You'll see here that it went up to a 1.618 expansion. I want to show you that because that's from the whole year. That's from the high in January to the low in March. The 1.618 expansion took it to 362, and the high on the copper was 362. To the exact penny. Now, I'm going to walk you through it because, you hear the stories, Rich Anderson's talked about it, many times in the past, that copper is known as, or Dr. Copper, tells what the market's going to do. Now, all I'm going to do now is I'm going to take a copper chart. This is the weekly chart. Now, I've gone from a daily to a weekly, but you're still going to see the 1.618 expansion at the top up there. Now, the blue line is the S&P 500. So you can see that it does have a very good, track record of what has followed the market. I mean, it made its low back in 2016. It had the high in 2018. It had the smaller high, 2019. It was right near the big high in January before the virus hit us. And look what's happened. This thing's been following very good. Now, the support in copper is way down at $3 a pound, and we're at $3.52. So this is why I'm looking at it. But there's a little bit something a little bit deeper too here. So if you like Gartley patterns, we're going to get one up here. Just get it up here for just a second. And here we're going to go to a monthly chart. And the number of times you've seen me put up a monthly chart, you can write on the head of a pen in boldface type. But look at this. This is the copper on the monthly chart going back to the high of 2011. You see that pattern right there where it says 0.618 right there at 362? That's a perfect pattern, folks, and it's A, B, C, D. I mean, that is a Gartley on the monthly pattern. I mean, how often have you seen anything like that? I mean, that's why I spent quite a bit of time this weekend doing a video on it, because it looked so interesting. And so the theory behind this was, if in fact this was going to be, something of really significance, the first sign of it, you would get a 382 retracement. And that's exactly what we got Sunday night, up to 355. And now we're trading at 352 and change. So this to me tells me that we have probably made a pretty significant high in the copper market. How much of a correction we're going to get? I don't know. I really don't know. All I know is that I'm looking at numbers. That's all I do. Even when I look at whatever it is, the virus or anything else, I just look at numbers. That's all I'm looking at. And believe me, folks, the only thing good about wait a minute, Ruby, just a second now. I will. Ruby's saying that she's lost 2 family members, and Ruby, I know a lot of people. I'm old, so I know a lot of people. But we finally had someone that we didn't. Her son. Excuse me. Her son, she's 94 years old. She lived in Cleveland. She passed away Saturday night late, but her son is one of my best buddies here in Tucson, Nikki Tudoro, and she passed away of a virus. She had a little bit of a heart attack, went in, and she died of the heart attack. They hooked her up to the ventilator, and I'm not going to tell you what they charged for one day of that ventilator. You wouldn't believe me. But anyway, that was the very first person that I've known that actually, I didn't even know her, but I knew her son. But as far as anybody else, I've not seen anybody die. But I don't know if your 2 family members were, overage like I am and stuff like that, then I can certainly see that older people, most of the people that are dying are older. Let's forget that. We'll ask Shane the stuff. He's going to be our guest tomorrow. He'll talk about it. I made a mistake by even bringing it up. The only good thing about the virus from the perspective of the news is they stopped beating up on Trump for about 5 seconds, which is pretty amazing in itself. But, boys and girls, let me tell you something. As an old man looking at this stuff for a long time, been through a lot of stuff, you better be really careful. Listen to what the news says to you today, whether it's Fox, anybody. Don't be really skeptical of what's going on. You know what I mean? You just got to be really skeptical. Yeah, I know I'm on a roll, but by golly, it's we'll be able to see. I will do my best to have Bill Meridian on. I think he's finally got back to Austria. I'll do my best to have Bill on either the Thursday or Friday. I will do that, and we'll be able to start to see this. So we'll see what's going on here. Anyway, okay. Shut up. Okay, let's move on to a couple other things that's looking out. Now, one of the things that we were, we just go through this because these are the things that we talked about on Friday. We'll talk about the British pound when we get up here.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and what we've done here is we posted a chart of the British pound on a 15-minute chart. Those of you that belong to 24/7 know that we sold that Gartley up there at 0.3. What we had going on this last night was a 135 pattern, lower tops given to us by Roy Longstreet and his son Bill. You'll notice that the relationship of the high from the low from 1 to 5 was exactly 78% level. And so we had been short this, and we covered it, of course, on Friday. You'll notice the big ABCD down there right at the 131 and change level. Then you had the gap up Sunday night. You can see that. That's when they said that everything was going to be okay and Brexit was going to be doing this or that or whatever. And then you'll notice that the high was a 1.618 expansion of the whole range on Friday. It was also, that big number up there, perfect 135. Look at the time between 1, 3, and 5, all lined up perfectly. And so we went short that at that level in 134.30. What we're looking at now is it's down a little bit from there, but not enough to even not to even count 30, 40 pips. It's hold on one second. It's very, very quiet in that area, but this Brexit is going to be dragging it out just as long as they possibly can. Boris Johnson's career is at stake. He's pretty much locked in for 4 years unless he really messes up, and he's a pretty smart dude, I would think, so he'll see whether it's going to get him through this stuff or not. Okay, let's take another quick look here at the relationship of Bitcoin to gold. Someone was kind enough to forward this on. I don't know which of the Tiger folks did this in the den, but they did forward it to me over the weekend, and this is a very interesting because it means a lot. And the reason why is look what's happening now between Bitcoin and gold as far as the open interest. You see that Bitcoin is actually exceeded the open interest of gold. I mean, gold is something that everybody trades. Well, not everybody, but a lot of people do. So a lot of people are coming in, to the Bitcoin market, which is basically, you're watching your coins, of course, and then you're also watching the other things. I can't remember. I'll remember in just a second. I'm trying to think of the other one. Oh, Ada, Cordero, Ripple, some of the others. So those are the few that it's doing. But when you're looking at this, you're looking at blockchains, folks. That's really what you're looking at. And I believe they're here to stay. And as a matter of fact, Goldman Sachs is putting in $500 million into it. So we'll see what's going on. And you'll watch a market here that is really difficult to hold down. Here is the chart of Bitcoin. We'll get this up here so you can take a quick look at it here. You know, we've had this run up to new highs, and we have been here now for well over 2 weeks, and we haven't sold off very much at all. Now, there should be a lot of resistance coming in here at this $2,000 coin level. So this is going to be interesting. What we'd like to see from a technical standpoint is you'd like to see a 382 retracement of the low that we made in September when we were just touching below $10,000, and then we doubled in price between September and December, and so we'd like to see a 382 retracement of that to see if it's going to hold. That number would come in right about 16,000, I believe, is the exact number, 15,900 as I recall. So that's one of the ones that we're watching. Now, I have not traded a share of this stuff, folks. I own a little tiny bit of a thing called ADA, Cardano. ADA is a symbol. Cardano is the one. We bought that at 6 cents a share in our first live trading thing, way back in May, and it's tripled in price. But, from 6 to 18 cents, if you have 3 shares, you're up 54 cents already. That's not so bad. Heck, you got to hold that one close to your vest. So anyway, that's what's happening with the cryptocurrency, with people are getting more and more involved in it. And more and more people, remember, they trade that 24/7, 7 days a week, and it's not the easiest thing in the world to buy. It's, but people do it, and I'm just bringing your attention to the fact that these are things that's happening. Now, Mr. Z has asked me a question just a second ago. Do I think that this is the bottom in the gold market with this spike that we had here at 1820? We've rallied. I guess I haven't seen the thing, but we've rallied, I think, $15 or $20 off of that bottom. Let's just double check it here to see where we are. We got up to 35. Let me pull a chart up so we'll be able to take a quick look at it. Frankly, I don't think so, Mr. Z, but just remember, I'm wrong a lot. But yeah, this is, to me, it doesn't mean very much. Actually, it could be. Oh, this is very important. I didn't see this because I was sleeping last night, believe it or not. That is a nice bottom. You're right. There's the bottom. You can see that was a really nice, get this up here, is a really nice 1.27 bottom there, the beautiful ABCD. Now we're rallying up. We went from 20 up to, we went one half of our Harmonic number. We rallied $17. So if we can get the gold today above these last highs that we had here up around 1745, 46, then I say, yep, there's got a chance. But frankly, if you'll take a look at the 24/7 newsletter, I'm sticking with this because the reason why is the fact that it has a chance to get down to the real critical level here of, really close to 1700. Let's get this up here. This is the long-term daily chart in gold. We'll get this up here to take a quick look at it. That's what we're looking at here is a potential move down here to the 1670 is the potential of this move. Now, if we get above 1880, this is a major bottom because the low that we made here, back when we covered the short position there at 1766 when Mr. Z got very bullish, that was the 78% retracement of the low that we made back in May. Okay, so there's a lot of things saying this could happen, and I believe that gold is going to have a big move. But remember, Bill Meridian was on it. I think December is the cycle low. The actual big low in gold, the big low, was way back on 10th, was at 1,030 back on in December the 11th, almost the spot-on low that we had here, December the 11th of 2016, where we were at 1,030 and we doubled in price to 20,060. So December is a key month, and so I am watching it with a great deal of anticipation. So that's it. I was late to seeing this morning in the gold market because of the fact that I actually slept last night for the first time in a while. Actually, a long sleep for me, about 5.5 hours. So anyway, that's what it looks like in the gold. The platinum just looks like it wants to rock and roll, folks. I mean, platinum looks like it's got $1,300 an ounce written on it without any trouble at all. We're trading at little above 1,000, so that's looking very, very bullish also. So those are just a few of the ones that I'm looking at. When we come back from the break, we're going to talk a little bit about the stock market. Because we hit some pretty interesting spots here last night that we had focused on in the videos that I sent out last night. It was doing pretty much what we thought it was going to do. Whether it's going to continue that way or not remains to be seen, but we'll be watching it here. When we get back, we'll be talking about the stock market through the eyes of the NASDAQ, because that seems to be the one that everybody watches. It's sort of the pork bellies of the stock index futures, but it's pretty accurate. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson on the line this morning. Rich, how are you doing?
Doing great. Good morning, Larry.
Good morning. Listen, what's happening to the wheat market? We've had a heck of a rally here, about 35 cents here over the last few days. What's going on there?
Well, it's real simple. First of all, we had a nice retracement. If you notice, wheat pulled back from its highs all the way back to 560, and then it's slingshotted up. That has to do with the Russians. The Russians are saying that starting February 15th, they're going to put a 76-cent a bushel tax on wheat. Their quota is 17.5 million metric tons, and anything over that, they'll have a tax of 50%. Now, that's going to push, the wheats down a little bit today because people are thinking, well, and this is true, that's going to motivate people to get in Russia, to get this Black Sea wheat out before February 15th, and they have to deal with the tax. Now, just like with China, these guys are different kinds of economy. They're kind of controlled by the government, and sometimes it's a ploy to get the prices higher. But I look at a chart that had a nice retracement, and now there's reasons for the rally. We also have problems, with the weather in this country. We got problems with weather in South America. So people are nervous about food inflation. Governments, even if you're a controlled government like China or Russia, you don't want your prices to get out of hand domestically because then your people get a little upset with you. So it has to do with the 76 cent a bushel tax starting February 15th, ending June 30th. Their quota is 17.5 million metric tons. So that's what's going on. And that
is China still buying corn and beans hand over fist?
They're still buying. They've slowed down some, but they're still buying. And, the Chinese are watching the weather just as much as we're watching the weather in South America. And, of course, it's a lot harder to watch weather in South America when you live in North America than it is to watch the U.S. weather. Mm-hmm. And so in the U.S. weather, you've got dryness in the wheat areas of this country right now. In South America, you've got dryness in Brazil and Argentina. Now they've got forecasts for rains over these next 2 weeks, but they need to produce. And then basically for the next 3 months, they need rains, every other week. They need some rains. The 4 largest states for soybean production in Brazil are the 4 driest states in Brazil right now. They're looking for relief in these next 2 weeks, but the rains over the weekend were like a half an inch, nothing to brag about, and that's not what they need. So, there's areas of concern all over, and if Brazil has a problem, then China will be shifting all their focus to the U.S., and that's what's got all these markets, it's got all these markets on their toes. We're going to have a demand for, are we going to plant corn or beans? We'll know that in March. So you got a big report on January 10th. The guys have asked about reports. What USDA is dragging their feet on changing some of the numbers based on the amount of stuff that China's bought. Eventually, they're going to have to realize those in those reports, and they could do them in any report. But the one on January 10th will it'll keep traders from getting too bearish for quite some, between now and then, I would expect. And, that could be another catalyst, depending on what they decide, depending on what the USDA decides to do. So it's kind of an interesting market. Oil prices have gone higher, and that helps with your ethanol. But ethanol plants, they're making money from the hand sanitizers, the DDGs, derived distillers grain, which is a byproduct when you take this stuff out of the corn. There's good demand for that because China's buying that. So it's kind of a demand realizing market, and those are the kind that are the strongest. By the way, a market that I don't trade and don't follow closely is cotton. And cotton's another market where, as the China demand comes in, excuse me, it could have some potential also. So I would keep an eye on the cotton market, which has grown in this country in the Southwest and in the Southeast, and looks kind of interesting. I look at the charts. You trade with your eyes, not with your mind. Trade what you see.
Hey, Rich, you've always talked to us here about Dr. Copper. I posted the Gartley pattern on the monthly chart of copper up there at 362. Do you think there's a possibility that we could get a correction in copper?
Well, I mean, we got a correction in wheat. You know, it had a very nice correction. It's been a pretty strong market. You know, it could have a 38% correction, but people are now focusing on what demand's going to look like in the last half of 2021.
Mm-hmm.
And we could have a real push towards raw materials in 2021. And copper's telling you that, you know, there's not going to be weakness. And with low interest rates, everything makes sense. You know, you can borrow money to do anything when you're paying virtually nothing for your money. Mm-hmm. And so I suspect the retracements will be relatively minor because they're looking for big demand for all raw materials in the second half of this year when you're talking globally, which that's why our valuations in our stocks are so high and with interest rates so low. And if the stimulus continues again, you know, if they have another round of stimulus or two, and the new administration, you know, how stimulative will they be? Will they come up with some spending plan that, you know, mm-hmm. But this is a worldwide deal, and I think you know, you buy moderate dips. The market's telling you that, you know, that Dr. Copper is telling you that. The little retracement we had last week doesn't look like it was very much. I would imagine, you know, you can pull back to 320, 325.
Yeah. Rich, what about the meat market? I noticed at the butcher shops now they're about 60% higher than we were 3 months ago. Is this going to keep going up, the price of pork and beef?
Well, again, we have a cattle on feed report on the 18th of this month, which is, will probably tell us that starting next year that, you know, the cattle guys had it pretty tough, and the packers just had it, you know, hand over fist making money. That we're going to maybe have less meat than a year ago. So I'm thinking by April, prices will start to look a lot better. In fact, that's where I'm positioning. You know, that's the month I'm focusing on. You know, the vaccines will be out, the R factor will start to drop. That's the way I see it.
Hey, listen, thanks for calling in, Rich. We really appreciate it, and be safe out there.
Right. Have a wonderful holiday.
Thank you. You too. I'll talk to you tomorrow. 877-927-6648.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. Let's hold on here just a second till I get this chart ready to get up. We want to thank Rich Anderson for being on the air here with us today. We're going to take a look here at this NASDAQ here. This is the pork bellies of the stock index futures. As we get this up here, you'll notice we had that 3 drive to a top pattern back on December the 28th. We were fortunate enough to get the short off at 12,600. And what we've done here is we've come down and we've made a low down here at 12,200. And we're just attempting the 61% retracement as what we're looking at right here, right now. We're trading right around that 12,500 level, which I believe is the exact 61% retracement. It's also the ABCD and the 1.27 expansion of the whole range between December the 10th and December the 11th. So it does have some meaning, but again, these can be shattered easily by these logarithmic traders. So be sure that you pay attention to these as you look at these unfold. Every day. We've jumped 100 handles, folks, in the last 17 minutes or so in the NASDAQ. So that's how quickly it works. Almost all of that, folks, is automatic logarithmic trade, algo trading. So you can't stand in front of that when it happens. And that's why your stops are there to protect you, because if you don't use stops, then something's not right. So let's pay close attention to that as we look at that. But if we get above 12,550, that would tell us that this is probably legitimate. Well, it is a legitimate bottom already, because we've already rallied 200 handles off the bottoms. Whether it's the ABCD structure that we're showing here or not, still remains to be seen. But it's early. This is amateur hour of the day between 9 and 10:30, and those are the hours that you want to watch when you're watching the stock indice futures for sure. We've got up to 36,870. 3687 in the S&P. The old high was 3715. That's near the 78% retracement, as I recall. Hold on, let me double check that just to be sure. I'm doing this from memory, and sometimes, the 78% level on the S&P comes in at the 3695. So that's also holding up relative. Now we gapped up quite a bit here. If you'll notice here, last night we gapped up from 36.55 all the way up to 36.70, and we have continued to go higher as we go through here. But there should be some pretty strong resistance at 36.95 in that E-mini S&P if that 3 drive to a top pattern is correct. There's so much news about what's going on in the world. The people react to it in different ways, and the stock market is one way, of acting with it. So you just got to be trade what you see, not what you think, folks. The more you think about this stuff, the more trouble you get into. Just look at the patterns, and that tells you what your risk factor is going to be. That's why trading can be pretty boring most times, because you just try to look at something just as really simple. And boy, that's what I try to do. When I start thinking about the fundamentals, and I've been through so many of these markets through all the years on fundamentals, that I really don't. I really don't pay any attention to them. I've seen so many times where they told us, we've heard it here before. We've seen it in so many different things. And so that's not a discussion. That's just my opinion. And again, if you pay more than 2 cents for it, you're probably paid a little too much. Now, I want to cover, yes, the Robin Hooders are out there, and believe me, more and more people are in the internet nowadays. That's why the times for the internet is getting slower and slower, because it's getting bogged down by so many people that are out there, in the market, and not just stock market, but doing this shopping and doing other things, so it's really interesting. So we'll keep a very close eye on these things as we walk through here this morning. I wanted to mention one thing here about something that I think is relatively important, and that is let me get this euro up, because this is the dollar is a little weak this morning, but it's up against some really, really important time frame, folks. If we take a look here at the long-term weekly chart here in the euro, you'll notice that we are, for 2 weeks in a row now, we've been right at that 122 level. That is the 78% retracement for the high in 2018. We came all the way down to 107 and change, and then we rallied up here to 122. This is still a bear market. As you can see, the retracements in the euro going back to 2011. The high that we made in 2018 was a 61% retracement, and those are right on spot on right, folks. I mean, that you can't make that stuff up. And then we come down, and then we're up at the 78% level, and we've taken just about the whole year, because we bottomed in March, and now we're coming into January, and we're right at this level right here. So this is important. We get above 122, the dollar is going to be in big, serious problems. But right now, it still has a chance, to hold these levels. What we're looking at, that would be right around 90 flat, I believe, 90.50 in the U.S. dollar index. So we'll keep a close eye on that as we watch through here. Those of you that are getting ready to plan your year, one of the things I would highly suggest is if you're bored during the day and you want some information, go to the Tiger Den, folks. There's a lot of smart people in there, and they have some really good ideas on trades. Mr. Z posts all of his trades. So many of the other folks do too. And these folks, what's going on. Terry's asking to talk about astrology a bit. Boy, a bit is going to be the understatement of the year, Terry. I've written some books on astrology, and the first one I wrote was the Astro Cycles, The Trader's Viewpoint. That was a very, very important book in my life, and it had some great information and sold a lot of copies, won some awards. But as I get more and more into it over these past 40 years, the less and less I understand it. That's why I have guests on that are much smarter than me about astrology. We've got Norm Winsky, Tim Bost, Arch Crawford, Shane Smolian. He's going to be on tomorrow. These guys are really professional astrologers. And this is a huge time here that we're looking at here from December the 14th to December the 21st. Bill Meridian, also Norm was really adamant about it on Friday. He talked about this big new moon that we have here right now, and I think we're in the fourth day of Hanukkah, right? No, third day of Hanukkah. See, 1, 2, 3. Yeah, we're in the fifth day of Hanukkah today. So this is all pretty important stuff with this new moon coming in here. So I think it's very important. Now, what Mr. Z's posting on is what I look at. I watch when you have a new moon and a full moon at perigee, where the Earth is as close to the Earth as it gets, or apogee as far away. Those are cycles. And if it comes in with the pattern, see, the pattern has to be, for me, the pattern has to be there, because that's what you control the risk by. You see, that just like in the British pound that we were looking at this morning, at that 134.30 level, that was where pattern and time came together, had nothing. And of course, the fact that we have the new moon today maybe means something, maybe it doesn't. I don't know that. That's unknown to me, Terry. But what is known to me is that it's 127, 1618, and 786. That I know. So beyond that level, I don't know, and so that's when I'll get knocked out. And so that's what I try to do. I believe that on my bucket list, and there's only a few things left on my bucket list, that's one of the things that I'd like to see, that someday you'll see a 10-minute segment on CNBC or Bloomberg from either MIT or Oxford, Cambridge, Yale, Indiana State, something like that. They'll talk about it, but frankly, that's it.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've posted something that I know something about, and that's natural gas. You'll see here that we had a beautiful Gartley pattern there, 3 drive to a bottom down there, just spot on. We rallied for 5 days, and then last night, Sunday night, we gapped up big time. We gapped up quite a bit, around 7 handles, and we popped up above that 382 retracement. That would have been a logical place for it to stop, but it just took off. So that's telling you that this is a legitimate bottom here. If you bought that down there, hang on there, because that could really be a nice one. That was a beautiful 3 drive to a bottom pattern, as you can see by looking at the little blue pennants that are there, or pyramids, and that should hold that level. And we should get a rally equal to the last one, which means that's up another 20 handles. that'll take us up to pretty close to 3 point or even above 3.00 cubic feet. So let's keep an eye on that as we follow through this same thing, and we'll watch it. Tomorrow, our guest will be Shane Smolian, and Mr. Twentyman is going to call in this week and introduce himself, that he is a real person and that he's been doing this for a long time. So he will check in with us and talk to us about harmonic numbers this week. And that'll be fun talking to him, because Jim's one of my oldest friends since, believe it or not, 1965. It's been 55 years. Shut the front door and raise the rent. That's amazing. Anyway, we'll watch these things closely. We're going to be covering a little bit of more commodities this week. I want to cover the hogs and the cattle. I want to cover wheat, corn, and beans, because we're at some real critical levels here after the growing season is finished up. We need to look at some of those things. I posted the wheat chart this morning, making the 382 retracement, and it's had a pretty substantial break from that level. Those are the kind of things that we like to send out by videos and stuff to our friends here at 24/7. We want to thank the O'Briens for bringing all this to the folks, because they do a great deal of information to the folks, and it's important stuff to pay attention to some of these things. They've got some really great guests on here, of course, and we'll see. But anyway, tomorrow we'll have Shane Smolian, so live every day in an attitude of gratitude, and may God bless.